Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. There continues to be two patterns to note on this daily chart. The first is the big longer term pattern, the shallow bright red July 22 to October 23 bullish shift pitchfork. Prices have recently been batted back down by the overhead bright red middle time, currently at 10,004. Nearby we have the often previously cited congestion zones and areas. These are between 93.95 to 96.06, and below this the small congestion bands between 91.83 to 92.11, and finally between 86.65 and 86.86. The ones we have been working through most recently starts at 97.51 and stretches up to the March 2011 high at 99.95. And prices have most recently pushed down and out of this congestion after trying spectacularly, but unsuccessfully at least this time, to break higher out of it. So I've discussed the big picture item and the immediate vicinity. Now let's look at more recent action, specifically this year. The market continues working its way slowly but brilliantly upwards within the newer dark blue late December 24 to start of February this year bullish Andrews pitchfork. Last week and this week as well has seen the outside tines for this pattern being tested both above and now below. The first real time actually in a while. However, the dark blue bullish Andrews pitchfork still shows off the late December 2024 today bullish angle of attack quite well. Today we are approaching for a second session the lower time below, currently at 96.67. That about covers the influences affecting the market. Overall, even now with prices moving still higher, all these actions have led to a mainly sideways market within a very, very wide range of about 8,800 below up to between the overhead congestion area 97.51 to 99.95 and a 2011 high at 10,180. So what should we look out for in the future? Well, please continue keeping an eye on the pitchfork, the dark blue pitchfork. It is the current showrunner for this year right now. Additionally, please also look out for the bright red middle time and the congestion areas, mainly below, as well as the 2011 high overhead. LME 3-month aluminium. There are a number of patterns here, one within another, all happening at the same time, all affecting the market, and most not working very well, and some I will retire. One that falls within this category and has been on the brink for all of this year is the very large and often mentioned tines of the mid-December 2023 to late July 24 bullish Andrews pitchfork. We are today well below the lower tine, and I'll retire this pattern after today. We also have a bright red shallowy bullish shift pitchfork for the same mid-December 23 to late July 24 move, and here we recently saw prices starting to establish themselves over the middle time, currently at 26.31, after pressuring it from below since at least September last year. But it was a tenuous hold over it, and last week prices dropped down through it and have remained below, pushing further down this week. However, this pattern still works as the lower time, currently at 23.23, is still some way lower. Okay, so last week we saw the market also push down through the medium moving average, currently at 26.11, which had acted as a decent support on a daily and sometimes closing basis since early January. But last week it gave way, and prices this week have pushed further lower, this time below the flatlining gold long moving average, currently at 25.48. The market also pushed down below other supports such as the December 2021 low at 25.81, and the supports at 25.63, 25.34, and we're now approaching the supports at 25.08 and 24.85. Below these are the significant supports of the April 2023 high at 24.62 and the 50% Fibonacci line of the December 23 to May 24 move at 24.54. I did say last week, and I quote, "In truth, I could see any significant move down carrying on until the 50% Fibonacci line of the December 23 to May 24 move at 24.54, end of quote. You see, the reason for this is that we're also within the previously broken and seemingly repaired very shallow dark blue bear channel, currently at 24.45 to 26.80. The topside had earlier been breached 6 weeks ago and also through most of March, but the moves on the upside had not been exploited, and thus we have seen the market turn and head lower. This recent move lower also pushed the market down and out of another pattern development, a bright green mid-January to end of March shallow bull channel. We are well below this pattern now, and I'll downgrade this pattern further next week. So what to look for going ahead? Well, I'd look to the dark blue bull channel as a possible way forward, but right now I have doubts about the downside pressure should prices move down and approach the combination of the April 23 high and a 50% Fibonacci line at 24.24. I have a suspicion we might see a slowing and even a halt there. Nevertheless, those are the immediate patterns, and I'd watch to see how prices react down at those levels. LME 3-month lead. The key features in this market, and some of them have been here for a while, all relate to the very large descending triangle, possibly a descending wedge pattern, highlighted on my daily chart with an early July 24 to early March 25 purple now broken downtrend, currently at 1989, and below by the bright red early August to late December 2024 head and shoulders neckline, currently at 1953, though it could also be the dark blue neckline extension, currently at 1905, of the July 23 to February 24 head and shoulders continuation pattern. 4 weeks ago, prices broke higher out of this pattern, and 3 weeks ago they broke higher still over the long moving average, currently at 2043. Then 2 weeks ago and again last week, they peaked at or just under the December 2024 high at 2103. In that rise 2 weeks ago, prices made the lesser cousin to the weekly key reversal, the outside week pattern. But the drop was temporary, as last week they tried again higher and failed once more. In the process, the market made a small March-based double top pattern, even Adam type. And yesterday prices dipped and closed below the neck of this pattern at 2015. Such a move will give us a primary target X2 down in the 1966 zone, close to and just above the bright red neckline, as well as a secondary harder to achieve target X3 down at 1926, close to the lows for this year. Now, this is all very well, but, and it is an important but I had previously laid out 3 weeks ago some opportunities topside for the break higher out of the larger descending triangle come descending wedge pattern. In this pattern we have a primary target X up in the 2209 area for secondary harder to reach target X1 further up in the 2320 area. There is also the possibility for the action since the start of December last year to date making a possible ascending scallop pattern. This will be something to look to and consider over the next few weeks. Possibly the market may try down towards the lower levels but then turn up and go for the topside targets, but I tend to favour the either or approach rather than this way, so it'll be topside or downside. Finally, okay, so let me once more temper, if not completely quash your hopes on the top side with my final point, one I've been making all this year, and I'll continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal as in the shadow of this bearish longer term pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.